My father retired at 58, assuming I'd pay his $2,460 mortgage. Then I discovered he'd used my income on bank forms, spent $92,000 on travel and an RV, and planned to shame me into funding his retirement. My father announced his retirement by handing me his mortgage statement in front of 47 guests. He had invited the family to a banquet room, accepted a gold watch from his coworkers, and given a speech about finally having time to travel. Then he called me to the front, put his arm around my shoulders, and said, "Lauren has done very well, so she is going to take care of the house payment while I enjoy the years I have left." Everyone applauded because they thought it was a joke. Dad did not laugh. His mortgage was $2,460 a month. He still owed $286,000, and the loan had 14 years remaining. I told him I had never agreed to pay it. He leaned toward me and whispered that he had already listed my income on a hardship plan with the bank. Then he said refusing now would make both of us look dishonest. The next morning, the lender emailed me a form carrying an electronic signature that looked like mine. It promised I would contribute $3,000 a month to Dad's household. So, who had signed my name? And why had Dad retired at 58 when his pension documents showed that working 4 more years would have increased his lifetime benefit by almost 40%? I was 32, single, and a senior project manager for a medical device company in Minneapolis. My salary was $168,000, which sounded enormous whenever Dad mentioned it, and much less enormous after taxes, a $2,190 apartment rent, retirement savings, student loan payments, and the cost of helping my younger cousin through nursing school. I had no problem paying for dinner, replacing Dad's broken furnace sensor, or taking him on a weekend trip. I did have a problem with someone converting my income into a standing family resource without asking. Dad, Martin, had worked for a telecommunications company for 34 years. He earned approximately $104,000 plus overtime and had good health insurance. My mother died from ovarian cancer 7 years earlier. Afterward, Dad bought a 5-bedroom house in a lakeside suburb because he said he needed a fresh start. The house cost $462,000. He put down only 10% and told me overtime would cover the payment. I asked why one person needed 5 bedrooms. He said grandchildren would eventually fill them. At the time, I was 25 and did not understand that he was already assigning future people to present expenses. For several years, Dad managed. Then he began dating a woman named Cheryl. Cheryl was 54, owned a small travel planning business, and described conventional employment as trading life for permission slips. She and Dad bought matching electric bicycles, joined a wine club, and spent weekends touring retirement communities in warm states. I liked Cheryl at first. She made Dad laugh again. The problem was not that she enjoyed travel. The problem was that Dad began treating retirement as an event other people were responsible for financing. 2 years before the party, Dad asked whether I would ever buy his house. "You love the neighborhood, and it would stay in the family," Dad said. I told him I did not want a suburban 5-bedroom house and planned to buy a smaller place closer to work. 6 months later, he asked whether I would become a co-owner so the property would pass directly to me. I declined and suggested an estate attorney. Dad acted offended both times, but I thought the subject was closed. Then, he started sending me articles about successful adult children supporting parents. He mentioned that he had paid for my undergraduate tuition, which was true. He had contributed about $38,000 after scholarships. I was grateful and had said so many times. But Dad began describing that support as if it had been a loan whose repayment terms he could create decades later. The retirement party took place in April. 2 weeks earlier, Dad told me he was considering retiring at 62. I said that seemed reasonable. I did not know he had already submitted retirement paperwork effective the following Monday. At the party, his mortgage statement showed an overdue balance of $4,920. Dad had intentionally skipped 2 payments while still employed because he wanted to qualify for a hardship modification. He listed my promised household contribution as the source that would make the modified loan affordable. I stepped away from the microphone and told him privately that I would not pay the mortgage. "Do not embarrass me tonight," Dad said. "We can work out the details later." I replied, "The detail is that I never agreed." Cheryl interrupted and said Dad's coworkers were watching. She suggested I smile for photographs and discuss numbers tomorrow. I left instead. By morning, 3 relatives had messaged to say how wonderful it was that I was keeping Dad in his home. One aunt asked whether I planned to move in after marrying. Dad had apparently told people the house was becoming our family base and that my payments protected my future inheritance. The lender's form arrived at 9:12 a.m. It contained my legal name, employer, annual salary, phone number, and a Gmail address I had stopped using years earlier. The electronic signature was simply my name in script font. I called the bank's fraud department. The representative froze the modification review and asked me to submit an identity theft affidavit. She also advised me to check my credit. No new mortgage appeared on my credit report. The contribution form would not have made me a borrower, but it falsely represented my commitment and could have been used to approve terms Dad could not afford. When I confronted him, Dad admitted completing the form. "I did not sign a loan in your name," Dad said. "I documented what family support will be available." I asked when I had promised $3,000 a month. "You said you would never let me lose the house," Dad replied. I remembered the conversation. It happened after Mom's funeral when Dad was crying in the kitchen of our old home. I had said he would not lose the house because of her medical bills. He later sold that house at a profit and purchased a more expensive one. He had taken a sentence of grief from 7 years earlier and stretched it into authorization for a different mortgage. I submitted the affidavit. Dad called it a betrayal. Cheryl said a fraud investigation could damage his retirement. I told her a truthful correction could not damage an honest plan. Then I requested Dad's retirement numbers. He refused, so I stopped discussing the mortgage. I sent one written message stating that I would not make payments, sign documents, move into the property, or represent that my income supported his loan. 3 weeks later, Dad called because the bank had denied the modification. He had received his first pension estimate, $3,140 a month before taxes. Social Security at 58 was not available. His mortgage, taxes, utilities, health insurance, and ordinary expenses exceeded $5,800. He asked me to cover the gap until he turned 62. That would have meant approximately $130,000 over 4 years, not including repairs. I suggested he withdraw the retirement election if his employer allowed it. Dad said returning would humiliate him after the party. I suggested selling the house. He said Mom would have wanted it kept in the family, even though Mom had never lived there. I suggested renting rooms. Cheryl said strangers would destroy their privacy. Every solution was unacceptable except my money. The first twist appeared when Dad's former supervisor called me. She had heard rumors that I forced Dad to retire because I wanted access to the house. She wanted to know whether he was safe. I explained that I opposed the retirement. She told me Dad had been offered a retention package worth $42,000 if he stayed 18 months. At 62, his pension would have risen to approximately $4,380 a month and included subsidized retiree health coverage. By leaving at 58, he chose a lower pension and had to purchase private insurance. Dad knew those numbers before the party. The supervisor also said he had taken a $92,000 lump sum distribution from a supplemental retirement plan. I asked Dad where that money was. "Allocated," he said. The word led me to a financial planner named Omar Singh. I offered to pay for one meeting if Dad brought every statement. Dad refused until the mortgage servicer scheduled a foreclosure counseling call. Before that meeting, the consequences began reaching me anyway. Dad gave the Homeowners Association my address and told its manager I was taking over household finances. A late notice for $1,180 arrived with my name typed beneath his. His insurer also called to verify that I would be the new resident and primary contact while Dad traveled. I told both organizations in writing that I did not own, occupy, insure, or manage the property. The association corrected its records. The insurer warned that Dad's plan to leave the house vacant for months could change the policy terms. Dad accused me of sabotaging his coverage by answering honestly. Then the electricity company tried to draft $640 from my bank account. Dad still had the routing information from the single mortgage payment I made during Mom's illness 7 years earlier. The transfer failed because that account was closed, but the authorization form named me as the responsible party. Dad said he had been testing whether automatic payments would work before the first mortgage draft. I froze my credit, changed security questions, and sent him a demand to stop using my financial information. None of those actions felt like something a daughter should need to do after a retirement party. They also made the dispute impossible to dismiss as a misunderstanding about one old promise. At Omar's office, we discovered the real retirement plan. Dad used $28,000 of the lump sum to pay credit cards. He spent $19,500 on the retirement party, bicycles, and a luxury travel club membership. He transferred $35,000 to a dealership as a deposit on a 40-foot recreational vehicle. The remaining money paid taxes and private health insurance premiums. The RV contract listed Cheryl as co-owner, even though she contributed no deposit. Dad intended to travel half the year, leave the house empty, and have me pay the mortgage on property he called my inheritance. Omar asked why he did not use the $35,000 to cure the missed payments and reduce the loan. Because the RV is the retirement, Dad said. The house is Lauren's future. I said, an inheritance is what remains after you pay for your own life. It is not a bill you send ahead. Dad left the meeting. Omar scheduled a second meeting with a pension counselor from Dad's employer. Dad agreed because he still believed someone would find a technical way to restore his old income without restoring his job. The counselor brought the retirement election packet Dad signed 5 months earlier. Page 3 compared leaving at 58 with leaving at 62. The lower pension, loss of subsidized health coverage, and $42,000 retention offer were highlighted in yellow. Beside the projected shortfall, Dad had handwritten, Lauren, house, /Cheryl, travel. The counselor said she had asked who Lauren was. Dad told her I was his daughter, a high earner, and the future owner of the property. She advised him not to list informal family support as guaranteed retirement income. He initialed the warning. There was also a 30-day revocation period after he submitted the election. Dad could have withdrawn before his final day. Instead, he waited until the period expired, then scheduled the public party for the following evening. I asked him why he did not tell me during those 30 days. Because you would have focused on every obstacle, Dad said. The answer revealed the difference between an assumption and a strategy. He had not forgotten to ask. He had deliberately protected the decision from my refusal until his employer would not easily reverse it. The pension counselor offered one remaining option. The company could not reinstate his prior position, but a contractor needed trainers for a 2-year network conversion. The work paid less, provided health coverage, and required 3 days a week. Dad refused because his retirement announcement had already received hundreds of congratulations. Omar said, "Embarrassment is not an expense your daughter is required to pay." Dad replied that nobody understood what 40 years of work had cost him. I believed that part. I did not believe the cost gave him ownership of my next 40 years. The next month, he made only half the mortgage payment. He told relatives I had frozen his bank plan. My aunt organized a family conference call and said children from our culture did not abandon parents. I shared the numbers with Dad's permission because he had already made the dispute public. I explained the $92,000 distribution, RV deposit, lower pension, and false contribution form. Dad said the RV was refundable. It was not. The contract allowed cancellation only with a 30% penalty after the vehicle entered production. The conference call produced another problem. My aunt offered Dad $5,000 and asked the rest of the family to contribute. Dad declined because accepting a group loan would require a budget and repayment schedule. He told her my arrangement was different because the house would eventually belong to me. My cousin Marcus asked whether I had ever agreed to inherit it. Dad answered that children did not have to sign for responsibilities that came with being children. The call went silent. Marcus later sent me a recording, with everyone's knowledge that the call was being recorded. Dad's statement did not create a legal admission by itself, but it stopped the relatives from pretending the disagreement was about me refusing emergency groceries. He wanted one person to subsidize a house, an RV, and a retirement date chosen without her. The next week, Dad mailed me a handwritten invoice for preservation of Lauren's property. It charged me $2,460 for the mortgage, $380 for landscaping, and $220 for pool maintenance. The house did not have a pool. Cheryl explained that the pool line was a template error. I returned the invoice with a one-sentence letter. I did not own the property and had requested no services. Lena later used the invoice to show that Dad was trying to manufacture a payment history and ownership narrative after the bank rejected his modification. Cheryl then offered a compromise. I would pay the mortgage for 2 years. They would sell the house afterward and reimburse me from the equity. I asked for a professional appraisal and title report before considering anything. The title report revealed an $86,000 home equity line I had never heard about. Dad opened the line 18 months earlier. He used $24,000 for house renovations, $18,000 to pay Cheryl's business debts, and $31,000 for travel. Interest and fees consumed the rest. The home was worth about $520,000, but the mortgage, equity line, selling costs, and overdue amounts would leave far less than Dad claimed. The renovations included converting the basement into a wine room and adding a screened porch. Dad had financed his retirement lifestyle with the house, then presented the remaining mortgage to me as a protected family asset. I rejected Cheryl's compromise. Dad responded by mailing me a quitclaim deed. He had signed over a 1% interest in the house and wrote that co-ownership proved I had a duty to protect it. My attorney, Lena Ortiz, explained that accepting or recording the deed could create complications. I had not signed it, and the mortgage still remained Dad's obligation. We formally rejected the transfer and sent the deed back unrecorded. Dad recorded it anyway. The county clerk accepted the document because only the grantor's signature was required in that state. The deed did not make me liable for the mortgage, but it placed my name in the title chain. Dad began telling relatives and the bank that I was a co-owner refusing to pay. Lena filed a disclaimer and petitioned to remove the unwanted interest. The court process cost me $4,700. During discovery, Dad produced an email he claimed showed my agreement. It read, "I can cover the house if you need me to. We will keep it safe." The email was real but incomplete. It was from 7 years earlier during Mom's illness. The full thread said I could cover one payment on their old house if medical bills delayed Dad's paycheck. Dad had forwarded only 2 sentences and removed the subject line identifying the old address. That was the second forged context, just like the funeral promise. Lena obtained the lender submission logs. The hardship form had been uploaded from Cheryl's business computer. Document metadata listed Cheryl as the creator. She had typed my name, salary, and old email address while Dad supplied the information. Cheryl insisted she believed I had agreed. Text messages between her and Dad showed otherwise. 3 days before the retirement party, Cheryl asked, "What if Lauren says no in front of everyone?" Dad replied, "She will not want to look selfish. Once the retirement is official, she will understand there is no alternative." The public announcement had not been Dad celebrating support. It had been pressure designed to create consent after the decision became difficult to reverse. I showed Dad the messages during a mediation session. He looked at them for a long time, then said, "Parents sometimes had to force adult children to accept responsibility." Lena asked what responsibility he believed I had accepted. Dad said, "She earns more than I ever did. What is success for if not family?" I replied, Success does not transfer decision-making authority over my money. The mediator helped us create a practical exit instead of continuing the title case. Dad would sign a corrective deed removing me, withdraw every claim that I supported the mortgage, and list the house within 10 days. I would waive a request for legal fees and pay nothing toward the loan. Dad resisted until the servicer explained that another missed payment would move the foreclosure forward. He signed. The house sold for $514,000. After the first mortgage, equity line, arrears, taxes, commissions, and repairs, Dad received $91,600. The amount shocked him because he had been telling everyone he held almost $250,000 in equity. He lost $10,500 canceling the RV. Cheryl ended their relationship 2 weeks later. She said retirement had become too stressful, which was a gentle way of saying she had liked the plan more than the financial reality. Dad rented a one-bedroom apartment for $1,340 a month. Omar helped him place $65,000 in a conservative account and reserve the rest for health insurance. He also returned to work part-time as a technical trainer. The job paid $34 an hour and did not restore the pension he gave up, but it covered the gap until Social Security eligibility. The training job was the same kind of work the pension counselor had offered months earlier. Taking it after the sale bruised Dad's pride, but it also exposed another false choice. He had described paying his mortgage or abandoning him as the only two options. Selling, downsizing, canceling luxury plans, and working part-time had always existed. They became visible only after my money was removed from the equation. The insurer never canceled the homeowner's policy, and the lender corrected every document naming me. The failed utility draft did not reach my credit report. I kept the fraud alerts active for a year anyway. Trust recovered more slowly than the paperwork. At our first Thanksgiving after the sale, Dad arrived carrying the old mortgage statement he had handed me at the retirement party. He put it beside my plate as a joke, then saw my face and immediately removed it. Later, he admitted he still thought of the party as the moment I ruined his retirement, instead of the moment his plan became visible. That honesty was unpleasant but useful. An apology offered too early would have been another performance. For months, our contact stayed limited to public meals and written financial boundaries, while he learned to live inside the income he had actually earned. For nearly a year, Dad spoke to me only about logistics. He blamed Cheryl, the bank, the employer, and the housing market, before he blamed himself. I stopped trying to produce an apology by presenting more evidence. The evidence had already protected me. It could not manufacture insight. We rebuilt contact through rules that would have sounded cold before the retirement party. He could not use my address, list me as an emergency financial contact, or send a company my information without written permission. If he needed help comparing insurance or pension documents, he had to send the complete file instead of selected pages. I would explain terms, but I would not become the solution hidden inside them. The first time he followed those rules, he emailed 3 health plans and asked which exclusions mattered. I marked the differences and returned them without choosing for him. He selected the least expensive plan that covered his prescriptions and paid the premium himself. It was ordinary adult paperwork, but it was the first decision in years where advice did not quietly become obligation. His apology came after he taught a retirement planning class for younger technicians. One employee asked whether children should be included as expected income. Dad told the class no, then heard his own answer. He called me that evening. "I made your salary part of my budget without making you part of the decision," Dad said. "Then I tried to use shame as your signature." I accepted the apology. I did not reimburse his legal costs, restore the lost RV deposit, or offer mortgage help. Dad is 61 now. He still works 3 days a week and plans to stop at 63. His apartment has 1 guest room, which he jokes is finely proportional to the number of people living there. We have dinner every other Sunday. Money discussions happen in writing afterward, so neither of us can rebuild agreements from old emotions. I sometimes wonder whether I should have paid a few months to protect Dad from foreclosure stress, especially after Mom's death left him vulnerable to the fantasy of escaping work. But the crisis was not caused by one missed payment. It was caused by a retirement decision built around money he did not own and consent he planned to obtain through embarrassment. So, if your father retired early because he assumed your income would cover his mortgage, would you pay temporarily to protect the family home? Or would refusing be necessary even if it forced him to sell and return to work?